Thank you, Nancy. I think that idea about perspective is very, very apt as we go into this session. So if anybody's taken a moment really just to look through the most recent set of FOMC statements that were released on Wednesday after the recent Fed meeting, or if you haven't read them and you've just taken an opportunity to scan some of the most recent FT articles that have come out in the last couple of weeks, I hope it's become very clear to everybody that the change in global power is starting to really drive a massive wedge through the decision-making of some of our largest and most powerful central banks. If we just have a look at some of the monetary policy that's taken place, you've got the Fed that have come out again last week and kept rates on hold. Whereas if you have a look at both the ECB, well not both, the ECB, the BOE, and the Central Bank of Canada, they've already cut interest rates this year, and they've left the door wide open for further interest rate cuts. If you then move to fiscal policy, I mean, I don't have to say too much about the DOGE in the US that's been brought in. They initially spoke about reducing federal spending by up to $2 trillion. They've scaled that back to $1 trillion now. But if you contrast that against what's going on in Europe at the moment, where there possibly soon could be a bill that's passed in Europe where Europe's going to go on a €1 trillion spending spree. And so really, when you have a look at this massive dislocation that's starting to take place throughout the world, I mean, prior to this, the world was really moving in lockstep with the Fed. But at the moment, there's massive uncertainty that started in the world. And uncertainty creates volatility. And volatility makes it very difficult for all of us here to value assets. And so it's very much with that in mind that we thought it would be a very good idea to start the day with some perspective and to kick things off with a quick-fire, rapid session where we've chosen 5 interesting asset classes, and we're going to work with you, the audience, together with some experts from Standard Bank, and we're going to get your views, our views, on where we think these assets are going to finish this calendar year on the 31st of December.
I think if there's anything that stuck out in everything that has been said so far, is that the world and the financial markets are going through an unprecedented level of uncertainty. In fact, my favorite phrase for 2025 is, the world is in a period of certain uncertainty. And for that reason, forecasting of our financial markets has become extremely important. So today, you all are going to be the forecasters. If you get it right, I was part of it. If you don't, I had no clue. So we're going to use Mentimeter. If you could all please bring out your phones, scan the barcode. And as you scan the barcode, the Mentimeter will come up. And we're going to start. There's some on the ground, there's some up there. And we're going to start with a simple one. The dollar rand, obviously the largest economy in...
Am I in the way? Sorry.
So we're going to start with dollar rand, the largest economy. South Africa has the largest economy on the continent, so we said let's start with an easy one. To my Nigerian colleagues, I'm sorry to say it, yes, they do have the largest economy on the continent. So you have 3 options, 3 forecasts. Above 19, below 1750, between 1750 and 19.
Oh, Shola, I think we've been too kind with how broad our range was.
Yeah.
Hey?
I think, yeah, maybe we should have made it even narrower. Let's start with an easy one.
Yeah.
And I can see everybody is sitting on the fence.
All right. Well, so that looks like that's going to settle somewhere between 60% of the audience feel like between 1750 and 19.
Yeah.
Let's lock it in there.
Cool. Alex, are there any prices for...
We'll work on it afterwards, right? Should we leave it there, Shola?
Yes.
Let's leave it there, guys. We've got a Standard Bank expert who's recorded a video, and they're going to give us their view.
So dollar rand is the one price that's actually been very, very resilient, quite stable over the past 12 months. I think you're going to see a similar kind of trend playing out over the next 12. The reason for that is that I think the dollar has a structurally weaker undertone because of what's happening to the US economy and the fact that US authorities would like to see the dollar weaker. But having said that, there's going to be quite a lot of movement between now and the end of the year. The uncertainty that we see currently could see the rand pop up above, say, the 18, 19 level, but that pop would probably be temporary. And at the end of the year, we would have had time for the rand to normalize to the levels that we're at the moment.
Okay, so that's interesting. So 60% of the audience basically felt that we'd stay in the range, 1750 to 19, and our expert, Mamaketi, feels that that's going to be the same case. So it seems like there's broad consensus that that's going to be the outcome. Shola, we're going to move to something a little closer to your heart here, oil.
Oh, yes.
So we've got Brent crude currently trading at $72 odd, and then we've given you three ranges here, above $80 a barrel, below $60 a barrel, and then somewhere between $60 and $80 a barrel. Where do you think oil will finish the year?
Okay. I do believe my friends from Nigeria and Angola, I know where your mind is.
They're in the 36%.
And for the oil importing countries, I know where you're thinking. And from this chart, I think there are more oil importing countries here. And it's very interesting because this one I was very interested to see the answer because the views you get out there are so varied around oil. On one hand, you have people talking about the uncertainty and possibility of conflict across the world. But then, on the other hand, we have conversations around the fact that the US wants to become more oil dependent, which means more supply to the market. Then there's the Chinese who are also expected to import more oil or use more oil this year. So it will be very interesting to see where this ends. And again, it seems like we're all in between. The period of certain uncertainty.
Right, so we've got 60% there within the $60 to $80 range. Let's have a look at what the expert has to say.
So I'm bearish oil. I think on a technical basis, oil has been in a downward trend, forming a series of lower lows and lower highs, at least dating back since September of 23. And in fact, I think last year, September, it formed a death cross on the monthly chart, which is a very bearish signal. If you go to the fundamentals, on the growth side, globally, there's a lot of concerns. Obviously, Trump's on-again, off-again tariffs should negatively impact growth, which should mean that there should be lower demand for oil. And then on the supply side, OPEC Plus has committed to increasing production. They're going to want to reverse that production cut they had back in November of 23, which was about 2.2 million barrels a day. I think the estimate is that we'll have about a 0.6% surplus in supply over the next 18 months, which should add downward pressure to Brent. My expectation is about 10% from here, so looking at around $62 to $64 a barrel by the end of the year.
So our expert was just on the lower band of our band, shall I?
You know what this reminds me? It reminds me of, you know when you're in school and the teacher asks everybody a question and says, just write it on a piece of paper and then reveals the answer and everybody starts to erase. That was my number.
What are we moving on to? The US 10-year Treasury now.
Yeah.
I think this is going to be a very interesting one.
Yeah. I think we all know why we put that there because we all know that the ripple effect of the US economy is very important to us here in Africa. While, when their interest rates are high, it means less investment here, and when it's low, it means more investment to the continent. So I personally want them to reduce interest rates.
Someone a little closer and a bit more balanced.
It's a reflection of how Americans feel right now.
Wow. That's very interesting to see, Harry. a much more split view
Yeah.
on where things are going to finish. I wasn't expecting such a large percentage above 4.5%.
Yeah.
Clearly, some inflation concerns. All right, let's move to our experts again.
So we're pretty constructive on US bonds. We think yields probably head quite a bit lower in the quarters to come. Unfortunately, as this introduces credit issues, we think that the response will be a monetary response and a fiscal response. And past the point, that'll mean that yields back up again. So I think the only real logical sort of answer out of the three to me right now would actually be to be in the range 350 to 450.
That's a good trader for you. He's completely hedged himself.
I had a bit of, that was what I said.
But maybe the first one where we've had the experts and the audience, not materially, but slightly different. The audience with 42% above 4.5%.
Yeah.
The next two are going to be interesting, Shola. These are our slight curveballs to the audience. We'll start off with gold. We've given you gold, 3 categories there, above 3.2, below 2.7. And then, Shola, again, we were too generous on our ranges.
Well, I think bearing in mind that above 3,200, we are asking for all-time highs, whether we're going to see that. Clearly, I think the interesting thing about gold is that it's one of those few asset classes that are not really affected by interest rates and affected more by uncertainty. So, yeah. Another interesting thing, though, around gold is that it's become very, very topical in 2025. I personally have been engaged in at least 5 or 6 conversations with central banks across the continent with regards accumulation of gold or using their gold in a more beneficial way for the continent. So this, I think, in 2025 will be a very, very important price to look at.
Again, to take the contrarian view here is going to be to short gold. 4%. Below 2,700. All right. What have we got here from our expert?
Gold has had a fantastic run over the past year or so. We're up 50% at around $3,000. I think that gold can still rally a little bit more, but definitely not expecting the same performance that we saw the previous year. But gold is still a protective asset. Central banks are still buying gold in order to diversify their geopolitical risk. So I still think you're going to end up the year a little bit higher, but maybe 3,250. Not a similar rally as what we've seen to date.
Excellent. So for all the ladies, this is another good reason to invest more in jewelry. So when people ask you why you buy more jewelry, just say standard bank gold prices, said gold prices are going to go up.
Store of wealth. Right. Right, our final one for today is going to be Bitcoin. Ooh. Yes, exactly. So currently at about $85,000, above 100,000, below 60, or in a range that you can drive a truck through there between $60,000 and $100,000.
Again, 100,000, bear in mind, is close to all-time highs. So do we think that the Bitcoin price is going to continue to go up? And also realize that Bitcoin also is similar to gold, is a store of value. In fact, I call it the young people's store of value.
Yeah, neo-gold.
Yeah. So again, no pressure. This chart might also give an idea of the average age of the people in the room.
You like that, Cole. So what did we had? We had 55% of the audience felt that gold would be above the top end of our threshold.
Yeah.
But here you've got half the audience essentially feeling that Bitcoin will stay relatively range bound.
Yeah.
So that's quite an interesting outcome. All right, let's see what our crypto expert had to say about that.
Bitcoin has 2 main properties. The first one being its store of value, or 21 limited supply, 21 million coins ever being produced. And obviously it's got a technology angle to it as well. So recently we've seen Bitcoin really follow the NASDAQ price quite closely. We probably expect that to continue in the short term as the US manufacture a sell-off in the NASDAQ to get inflation lower. But at the same time, we're seeing a bunch of regions in the world spending more money, Europe, China, Japan, etc. So eventually, I think it leads to Bitcoin actually regaining the store of value gain, and Bitcoin after a year from now probably being in the 100,000 region or maybe even above.
Excellent.
All right, so
I
slightly
think,
different to our
I think
audience.
everybody should give themselves a round of applause.
Thanks, everyone. So, that's the end of that session. I hope it's been a good start and given everybody a sense of where everybody's heads are on some of these assets. Sholo and I were laughing yesterday when we were having a look at the session, and we felt that that should definitely be considered by the audience as the long and the short of it, and we hope that it's been incredibly helpful. And what we should probably do now is hand over to a real expert in terms of Gulam, who will be able to give us some guidance. Thanks,
Thank
Nancy.
you.
Thanks, everyone.